All right, so I am filming this little video on a Friday afternoon after hours. It is 8:18 by 8:19 GENE. This is the biggest supernova in the entire stock market right now. This is a 10-day chart, and it's basically up from 2 to the 8. So, more than a triple, nearly a quadruple today. In the past few days has gotten a little freaking crazy. And there's a lot of big time shorts in this, and they've gotten squeezed, and they're not necessarily admitting their losses on Twitter. Of course, that's the beauty of non-transparency. It's kind of interesting when there's a stock like this, and then all these big degenerate traders who somehow can't even go a day without trading a stock that goes from like 2 to 3. Somehow, all of these traders leave. They leave their computers and they're just not playing it, and they're like, and I think that's BS. I think everybody is playing this. I'm a degenerate, and I try to trade far less than anybody else. So if I'm trading it, you know that they're trading it. And the fact that it spiked on Thursday and crashed, I know a lot of people who were shorting it overnight. Unfortunately, several of my top trading challenge students, like Tim Grittani and Azimjan, I think Grittani tweeted that he lost like $7 grand in the morning, but then he was up like 10 grand. So he's up like 3 grand. He made it up shorting later. But Azimjan lost. He's the guy who he named his son after me, Little Timur, and he's turned 2,000 into 300,000 in just a few years. Today he lost like 15,000. He had already made 20,000 in the past few days on this, so it's not a total loss. But this stock is scary. That's what I'm trying to say. And I have a short position right now of 2,000 shares. Normally, I was shorting this all day for like 4,000 shares, 5,000 shares, sometimes even 6,000 or 7,000 shares, because I really thought it was going to crack. This is a classic supernova, and sooner than later, it's going to crack. I don't know what the exact top is. I never try to guess the exact top, but when you start seeing this just ridiculous spiking, especially for 2 days in a row, usually day 2 or almost always day 3, and nearly 99% of the time day 4 is when it cracks. And here's where it gets interesting. The reason why I'm short, not because it cracked. So normally I would say you want to short it when it cracks support, and support was clearly 785. And all afternoon it held it. It cracked it for a minute, but it actually was a fake out breakdown. And that was scary, the fact that it held it. But on Monday, the U.S. stock markets are closed for a holiday. This is an ADR. This is an Australian company, and it trades in Australia. The Australian markets are open on Monday. So that opens up a little opportunity, because now we have seen this thing spike for 2 days in a row. We know that they usually break down on day 3 most of the time, and sometimes day 4. But Australia, basically, you have another day. So an entire day where it's going to trade in Australia, and the US ADR will not trade. So on Tuesday, when the US ADR opens, it's going to, kind of be pricing in whatever happens in Australia. And I would not be surprised to see this tank 20, 30, 40% in Australia, which, obviously would make this gap down. It's not an exact 1-to-1 ratio relationship, but this would then gap down to the 7s, if not the 6s, and I'll capture. I only have a small position, but I'll capture $2,000 or $3,000. You also have to remember, I don't just trade just to profit. Unlike all these other traders who don't teach and who aren't transparent, I trade in order to teach. So I partially just shorted. Even if I only shorted 100 shares, I would still do this video lesson, because normally I would say short it when it cracks, support, but because it came close, and because it's not an exact science, and because you have an extra day in Australia, you have to kind of take that risk. And then also, one thing that a lot of people are forgetting, when people are being like, why are you shorting this? It didn't crack. Well, there might not be shares to short when it does crack. It's very difficult to find shares to short of this. So I have my 2,000 shares, and I have them reserved for Tuesday when the stock reopens. So I can short it, as many times as I want, and that is a huge advantage. So sometimes you have to risk a little bit of pain, but I think that I'm actually, giving myself a little bit better odds, because, as you know, I have patience problems. So if this does tank in Australia, then I'll just, collect my $2,000 or $3,000 in over the weekend profits. If it doesn't tank in Australia, then I might take a loss. I don't know. It depends on how it's looking, what it's doing in Australia, what the volume is. This could easily spike to $9 or even $10 a share. Perhaps this is all consolidation, and that's why it didn't crack support so easily, because it's gearing up and getting ready to go to 10. I don't know. I don't claim to know 100%, but what I do know is that there's an opportunity here, and with a small position, I think that there's a pretty good chance that I'm going to make 50 cents to $1 a share, maybe even $2 a share, versus less risk of it spiking. It could still spike, but there also could be some news. It could get halted. They could do a financing. When you're shorting a stock that's up from the 2s to the 8s, and that really doesn't deserve this, a lot of bad things can happen. So you kind of want to give yourself more time for those bad things to play out. Obviously, it's risky. This easily, I could lose 50 cents or $1 a share, but given the situation, I'm short 2,000 shares, and I lost a few $1,000s this week shorting this one. In my previous profession of not teaching and just trading, I would be short a boatload right now, and I'd probably be short a boatload from like the 6s or the 7s, and because I would be down so much, that would force me to hold. And then when it would come down probably next week, I would still hold and not make just 50 cents a share, because then in my mind I would have to validate, why am I risking losing $1 or $2 a share? So I would hold for longer, and then I would have bigger gains. That's not exactly a safe strategy. If you're off by a day or two, this thing could go to $20 in this bull market. We have no idea how high it can go. So I like taking small positions. I like trading safe, but I also like positioning myself for a potential crash, given the odds. Given Australia, if the U.S. stock market was open on Monday, I probably wouldn't have an over the weekend position, because then I would just probably short it either pre-market or during market hours if it started to fade, or if it spiked too much on Monday. But we don't have that opportunity. So you have to go with what is given to you. And what's given to us is the fact that there's a little bit of an informational inefficiency thanks to the U.S. holiday, and the fact that we know that this usually tanks on day 3 of the pattern, which would be Monday's trading in Australia. So interesting, very interesting setup here. I definitely wouldn't bet big either way. I know some people are like, Tim, it's breaking out, it's green every day, just buy it. That's a risk too. What if they do a financing? What if they get halted? What if they get investigated? What if something comes out with an expose? The odds favor shorting it. But at the same time, I can't short it big, because the price action did hold support. So you kind of have to take the good with the bad with this one. If you lay out all the indicators, all the pros and all the cons, I think that the odds favor it dropping $1 or $2 a share on Tuesday, and that's why I'm short a little bit. And the fact that it's going to trade all day on Monday, and the U.S. ADR will not trade, that helps me with my own patience problems. I have patience problems. A lot of the times these stocks will crack support, and then I should just hold it for a day or two or a week, and I take profits too quickly. So by the stock market actually being closed and seeing what it does in Australia, that actually is a benefit to me. So you also have to kind of know your own personal issues, and this has always been an issue for me. I've always had patience problems, and I talk about all this stuff openly because I want you to learn from my issues and see that my $4.2 million in trading profits is nowhere near best case scenario for these kinds of stocks or this strategy. A lot of people are like, Tim, you're such a bad trader. You're losing here. You're breaking your own rules. Yeah, I've always done that. I've gotten actually far better with my position sizing, and I break my rules every now and then. But I don't have the big losses that I used to. As I said, 2014 was, and as you saw, was a record trading year for me. Nearly $1 million in trading profits. More importantly, I had several $70,000-ish profits, and not one of my losses was more than, I think, 15,000. So I did a really good job of minimizing my losses, and I'm going to keep going in that trend. I don't like big losses. I don't care how big my gains are. I don't want to have that kind of heart attack type trading where you have big losses and big gains, and if you slip up just a little bit, the whole equation goes haywire and you lose big. And I don't want that, so I don't want to teach that. So congrats to everybody who has been trading jeans softly and safely. This is still early in the pattern. It'll likely crash next week, but we don't know where the top is. So I have a small short position, and we'll see how it trades in Australia tomorrow. Thank you guys. Have a good holiday weekend.